Hello and welcome everybody to today's webinar with Worldwide Healthcare Trust, ticker WWH. Today we are joined by Dr. Trevor Polischuk, partner at OrbiMed and co-portfolio manager of the Worldwide Healthcare Trust. The webinar today will include a focus on some key areas of innovation identified by the Trust within the sector, while also touching upon the rapidly changing political landscape for US healthcare. So following Trevor's presentation, there will be an opportunity for Q&A at the end, so please feel free to send in your questions via the chat on the webinar platform. For those that don't know me, my name is Aaron Atkar. I'm a healthcare analyst and investment trust analyst here at Edison. Hopefully you're all familiar with Edison and what we do, but in case you don't, the company's been going over for 20 years. We're a global equity research and investor engagement firm. We're probably best known for our research. We're proud to put on events like these webinars as well. So for now, I'll pass over to Dr. Trevor Polischuk after a brief introduction. So Trevor Polischuk, PhD, is a partner at OrbiMed on the public equity team focused on the global pharmaceutical industry. Previously, Dr. Polischuk worked at Lehman Brothers as a senior research analyst covering the US pharmaceutical industry. Dr. Polischuk began his career at Warner Lambert as a member of the pharmaceutical global marketing planning team, focused on commercial forecasts and product planning for the global pipeline. Dr. Polischuk holds a doctorate in neuropharmacology from Queen's University and an MBA from Queen's University of Kingston in Canada. So Trevor, thank you very much. Over to you.
Great. Well, thanks, Aaron, and good evening, everyone, and good morning from New York. I'm very excited to have the chance to chat with you today on healthcare investing and specifically the Worldwide Healthcare Trust. Maybe we could have the slides up. Perfect. Next slide, please. In addition to the trust, today I will discuss with you my firm, OrbiMed, who manages the trust, and a lot on innovation and the absolute plethora of it going on in all parts of healthcare. I'll discuss a little bit about performance, both current and long-term, and I'll finish by reviewing our investor playbook for 2025 and beyond. Next slide, please. But let me start with why you should invest in healthcare today. It's very simple. More people, more demand, more innovation, more spend. Every part of which is being influenced and accelerated by artificial intelligence, all conspiring to create what is really a very highly predictable, long-term, high-growth industry that is absolutely huge, representing 10% of the global economy, and is expected to more than double into the end of the decade. Next slide, please. The Worldwide Healthcare Trust is really poised to capitalize on this growth as we focus on the entirety of the healthcare industry and really seek to invest in all subsectors, all geographies, and virtually all market caps. We have institutional expertise in biopharma, so both biotechnology and pharmaceuticals, and medical technologies, life science tools, healthcare services. We have investment professionals in key developed markets like US, Europe, UK, Japan, but also in the emerging markets, which is very important, particularly in China, as well as India as well. We are unequivocally your one-stop shop for global healthcare investments. Next slide, please. Some of the key hallmarks of the trust include an investment portfolio that is 100% a collection of our very best ideas, bottom-up ideas, across all subsectors. Our total focus is on innovation across the portfolio. That leads, in our opinion, to industry-leading growth opportunities in a fund that is very large, liquid, and diversified, and is managed really by a veteran investment team with a very long-term proven track record, and we've just celebrated our 30th anniversary of the trust. Next slide, please. So who is that team? My firm is the manager of the Worldwide Healthcare Trust, and we've been managing the fund since inception. And I'm very proud to say that OrbiMed is the largest dedicated healthcare investment firm in the world with 100% focus on healthcare. We have leadership both in private equity and public equity, which is my focus. Our assets under management is now over 19 billion US dollars. We have almost 150 professionals in the organization, including a public equity team of over 30 people, including 4 portfolio managers, 14 analysts, 5 traders, a chief risk officer. We have a newly developed 4-person quant and AI team embedded within public equity. We have a head of ESG. We're globally headquartered here in New York, but we have offices in San Francisco, Hong Kong, Shanghai, Mumbai, and also London as well. Next slide, please. But let me get into the real key to my presentation with this slide. It's just really to discuss quite frankly, the revolution of innovation and the overarching themes that are going to drive growth in healthcare over the next 30 years and really drive the returns of the fund. Of course, AI is touching almost every aspect of the industry, like it's doing across virtually all industries, quite frankly. But we expect innovation to drive new medicines and cures at a pace never seen before, in part due to revolution in diagnostics and personalized medicine. Advances in medical technology will change interventional therapies in a way we've never seen before. And quite frankly, overall, we could see costs and healthcare services plateau or even deflate going forward. And we've identified 10 megatrends of investable innovation across the entirety of the healthcare landscape. Next slide, please. First off, in therapeutics, I want to discuss neurology because this is one area that we've been most excited about over the last few years. Where over the next 30 years, we believe diseases like Alzheimer's, Parkinson's, Huntington's, and other age-related dementias will be treatable, curable, and perhaps even preventable. You know, innovation here has been incredible impact on therapeutics over the past 30 years, and I've seen it firsthand, particularly in Alzheimer's disease. As a PhD student studying neuropharmacology in the 90s, I recall the breakthrough approval of Aricept, pictured here, 1996. This was the very first drug approved that actually improved patients' memory and functioning. This was a landmark achievement at the time, but quite frankly, the drug did nothing to alter the course of the disease. It took another 27 years for the next major breakthrough in Alzheimer's, coincidentally by the same Japanese company called Eisai. And I've seen countless failures in this space over that long period of time, but I recall vividly being in Japan in the fall of 2022 when Eisai announced positive pivotal data for a drug that later became known as Leqembi, which is an antibody that actually showed the delay in progression of Alzheimer's disease by much as 2 years. This was truly another breakthrough achievement in this disease state, and one that most people believe would never actually happen at the time. But what's next? We think cures are next, and even preventative therapies in at-risk patients that could emerge over the next 30 years. And we're not alone in thinking that. And in fact, we might have some data as soon as this year, and maybe into next year, from Eli Lilly, who's working on Alzheimer's prevention as we speak. And we do think that disease prevention is the next missing piece of the puzzle of discovery, and would be the next really holy grail in the treatment of neurological diseases. Next slide, please. In oncology, we believe the next 30 years that most cancers will really be moving from a death sentence to chronic disease, a shift that really began about 10 years ago with immunotherapies, and I think we're going to see the acceleration of even more cures going forward. Unlike Alzheimer's disease, however, breakthroughs in cancer treatments have occurred at an incredible pace over the past 30 years, and we fully expect this to continue. And why is that? Well, cancer, first of all, is not just one disease, as there are over 200 different types of cancer. but the vast majority of them do have a genetic mutation or damaged DNA that underlies its cause. 30 years ago, almost all cancers were basically treated with chemotherapy. Today, we have a much more sophisticated understanding of the biology of cancer, and the FDA has approved over 100 drugs for the treatment of cancer over the past 30 years. And we believe that this innovation curve is going to continue to accelerate. Why is that? First, through the advancements of screening technologies and improved molecular diagnostics. Second, while individual patient genetic sequencing happens today, the number of targets we look for is relatively small, and we think the number will soar over the next 30 years. And lastly, this combination of advanced diagnostics and genetic understanding, I think, will lead to therapies that are not one size fits all, but rather one size fits one. In other words, your treatment regimen that is completely tailored to your exact type of cancer, all with a curative intent. And we've seen this with companies like AstraZeneca, Roche, who are leaders across some of these categories. But there's still so much to go in the oncology space. Next slide, please. In cardiometabolic disease, I'm sure everyone is fully aware of the obesity craze that has taken over, both from a media and stock market perspective now for a couple of years. However, we think we're just at the dawn of a huge ripple effect on so many other disease states with these medicines. Interestingly, I don't think most people appreciate that this new class of drugs, these GLP-1s, is actually over 20 years old. It's undergone many cycles of innovation over those 20 years with improved efficacy, improved tolerability, improved ease of use over those 20 years. And yes, the weight loss of current options like Wegovy and Zepbound is really incredible, but that is not where my excitement lies in this class, but rather it's the beneficial effect on so many other disease pathways in your body. That GLP-1s, when you use them alone or ideally in combinations with other targeted agents, can dramatically improve your cardiovascular health, your metabolic health, and treat a number of different metabolic diseases. Today, and we're just at the beginning of that revolution, Novo Nordisk, Eli Lilly, and a host of new competitors that are coming are going to create a whole new class of super medicines. That's what we're calling it. Drugs that will impact dozens of diseases, which more than quadruple the total number of patients who may benefit from these type of drugs. Not just diabetics, not just people who are overweight, but in both treating disease and preventing clinical events before they arise. You know, we've already been seeing this today with benefits of these medicines shown in the prevention of heart attacks, strokes, the treatment of kidney disease, heart failure, liver disease, sleep apnea, even pain associated with arthritis. And later this year, we're actually going to find out if there's some potential benefit in the treatment of Alzheimer's disease, also with these drugs. Amazingly, we've already seen that these drugs are able to prevent diabetes, type 2 diabetes, in obese patients, and an astounding 94% of patients. Another landmark trial. Absolutely incredible. I think these super medicines will unequivocally increase the quality of our life and our longevity as well. Next slide, please. In inflammatory diseases, I think we believe the next wave of therapies will be shifting to target the root cause of these diseases, leading maybe to disease eradication, not just symptom relief. You know, if I think back to the 90s, we had simple antihistamines, creams, inhalers to treat our allergies, you know, skin rashes, asthma, arthritis, and they provided some modern symptom relief, but significant side effects. I have Zyrtec pictured here, and who doesn't remember that absolute knackered feeling you get when you take Zyrtec for your allergies? Today's therapies, though, are much more elegant. They're typically antibodies for all of these same conditions and much better symptom improvement, especially for severe disease. But for tomorrow's therapies, I think we expect a step change in efficacy. If we can reset the mast cell system within our bodies or prevent our immune system from turning on us, or maybe even genetically alter inflammatory pathways that cause asthma or rheumatoid arthritis, we'll be on the precipice of chronic therapies that will fully prevent the onset of these symptoms and perhaps even eradicate these types of diseases entirely. A very exciting space, in our opinion. Next slide, please. Perhaps, though, an area which will see the most advancement over the next 30 years is in genetic diseases. With the sequencing of the human genome back in 2000, which was another landmark achievement in healthcare, our understanding of genetic diseases has grown exponentially over those past 25 years, and we're standing now at a precipice of an explosion of many new gene therapy medicines, all with curative applications. It's only been 8 years since the first gene therapy medicine was actually approved. In that period of time, we've seen significant improvements in safety, efficacy, administration of these various types of new therapies since that time. But most excitingly, basically all of these therapies have curative intent. Still very early, but the number of diseases treated by gene-altering technologies we think will dramatically increase as well, both for common disorders, but also ultra-rare genetic disorders as well. I think the ease of use and administration will also continue to evolve here, and quite significantly, to the point where many gene-related therapies will just be a very simple one-time dosing regimen. And of course, the efficacy of these therapies will be judged on their curative abilities, because that will be the key point of gene therapy. And I know this space has been besieged with concerns and safety issues most recently, but I just want to remind you, we're still in the infancy here. The number of approved therapies has gone from 0 to 30 in about 10 years, but that suggests that the field, like I said, still in its infancy, but we think this number of approved therapies can grow by over 1,000% over the next 30 years. So very critical area for us to be watching. Next slide, please. So moving to medical technology, one key area which we expect continued innovation is in robotic surgery. Some of you may have heard of a company called Intuitive Surgical. This is in the portfolio today. It's been there for a couple of years. They're the clear leaders in robotic assisted surgery today. You can see in these photos how their platform has evolved over the past decade, from the 1996 prototype that they called Lenny to now the 5th generation system that is available in hospitals today. And the sophistication of this system has 10,000 times the computing power even over the previous generation. And in it, embedded in it, is also AI learning, not only for the individual surgeon using it, but also over the entire network of these robots on essentially a global basis. It does have some autonomous systems in it today. The best way I could describe it is it's almost like a self-guided option, like a Tesla that can parallel park itself. But this technology, coupled with AI, continues to mature to such an extent that we believe over the next few decades, if not perhaps earlier, we believe the active role of a surgeon will continue to lessen over time, perhaps to the point that these robots can become completely autonomous. But most importantly, all the while improving patient outcomes. Next slide, please. Continuing in med tech, I think the field of stem cell technology and other similar novel technologies will impact many parts of the body in terms of organ regeneration, brain interface, and even integrated bionics. In Japan, for example, where some of the best pioneering work has been done in stem cells. They've been the leaders in there, given some of the Nobel Prize-winning work that has been done in Japan, and it's continuing to this day. Companies like SanBio, Helios, or Kurips, they're harnessing stem cell technology today to impact the brain, lungs, and heart conditions to treat like post-heart attack victims, heart failure patients, post-stroke patients, patients who've experienced a traumatic brain injury, and even acute respiratory distress. And those trials are ongoing now, and we're at the precipice of launches of some of these therapies in Japan this year. And there's companies like Neuralink are already creating brain-to-computer interfaces that translates neural signals into action. And look, they've only done this in about 25 patients. They have 10,000 patients on their waiting list. And the goals here are really multifold with this type of brain interface. Of course, treatment of Alzheimer's is certainly a potential here, but also things like depression, migraine, epilepsy, sleep disorders, but also vision and hearing impairment. And there's a handful of companies like Boston Scientific, Abbott Labs, Medtronic, Johnson & Johnson, all are working on this today, albeit very early in some cases. But over the next decade plus, we do think technological advances will make organ and body augmentation, if you will, the norm. Next slide, please. Diagnostics has been a very exciting space, a space that we've been very keen on over the past 5 years, and not really due to COVID, mind you, but rather the development of things like liquid biopsy, which is moving from surgical resection to disease detection or genetic mutation to simple blood draws, replacing that with simple blood draws. Companies like Exact Sciences or Natera, or even Caris Life Sciences, which IPO'd earlier this year and is in the portfolio, who use AI learning for molecular insights for cancer care and drug development, are changing the way we think of diagnostics today. We do have wearable diagnostics today, from Abbott to monitor blood pressure, and companies like Dexcom to monitor blood sugar levels. But I think in the future, we're going to have implantable diagnostics that will push diagnostics from a few conditions to potentially monitoring hundreds of different conditions. And these types of devices actually might even work for real-time diagnoses like heart attack or stroke or aneurysms. And can you imagine getting an alert on your phone telling you you're having a heart attack? I think that's really incredible. And I don't think it's something of science fiction. I think it's a product of innovation. And at-home imaging might not be quite a thing today, but we've seen the technology is advancing. At the same time, costs are dramatically coming down on some of these imaging platforms. And this combination of the two might be able, to make this really an at-home service, kind of synonymous to how we thought about flat screen TVs over 20 plus years. How they were thousands of dollars and no one could afford them. Well, today you can get that 70-inch screen for maybe a few $100s. I think something similar is going to happen here over the years. So overall, I think there's going to be a dramatic revolution in diagnostics that we're already involved in, and I think it's going to create earlier interventions for cures and prevention of disease alike. Next slide, please. And as AI continues to impact us more and more, I think this is going to be felt also at a patient level, as what we like to say, healthcare actually comes home. I know we have teledoc today, and the utilization of that increased dramatically with COVID, but I think that's just the beginning. Primary care doctors, I think, are going to be replaced by sophisticated AI interfaces. That general practitioner diagnoses are going to be replaced by AI-designed treatment algorithms that will be able to pull from millions of caseloads of previous patient examples instead of just what that one particular doctor is used to seeing, and just pulling from their own experience. They'll be able to pull from millions of experiences. And layering on the increase of personalized medicine that I sort of discussed already, this is going to represent a material shift in patient care, increasing throughput incredibly, reducing wait times to see a doctor, but again, importantly, bettering outcomes for the patients who are sick. Next slide, please. So I think you can tell, given the previous 9 slides that I have shown you, that we expect radical changes in the entirety of the healthcare ecosystem over the coming decades, across therapeutics and non-therapeutics alike, impacting drug discovery, drug development, diagnosis, treatment, the use of personalized medicine to treat diseases in patients, the advances in medical technology that I discussed with you, and healthcare services, all of this leading to more cures, better outcomes. But with AI impacting each and every part of this environment, perhaps the biggest impact of all may be dramatic cost deflation of the system, removing complexity, adding simplicity, and reallocating costs to places that it can have a much bigger impact on health outcomes, like innovative drugs, for example, rather than just healthcare bureaucracy, which is probably the #1 issue, at least here in the United States, in terms of GDP spend on healthcare. So the entirety, the confluence of all these changes that I've been discussing could be really game-changing on a global scale, quite frankly. Next slide, please. So let me quickly pivot to performance. What has this meant for the Worldwide Healthcare Trust over the past 30 years? Let me just start, though. This is our current performance. We just closed the books on our first half. Our fiscal year ends in March, so our first half ending September 30th. These numbers aren't fully audited, but I think they're almost spot on, and it's been an absolutely great start to our fiscal year. You can see the top line represents a 5% absolute return, but what we're most excited about is the excess return over our benchmark, which is the MSCI World Healthcare Index. You can see a greater than 10% relative return over the benchmark over the first 6 months. And this is the Trust's second best start, our best first half in 20 years, and the best 6-month, any 6-month period in the past 10 years in terms of excess return. And we're very excited about this. It's been a volatile period. Just want to remind everyone who's watching that the relative healthcare underperformance versus broad markets has been very stark over the past few years, and it's continued into this year as well. You can see the MSCI World Healthcare Benchmark down 5%, which is about a 20% underperformance relative to broad market. So we're very happy early on. Next slide, please. But we're also very proud of our performance since inception. Remember, at the start of this, I mentioned we've been managing this trust for the entirety of the 30 years. I've been at OrbiMed for I think 23 years now. I've been involved with the trust some form or some fashion every day of those 23 years, and we're very proud of this. Just to put this in perspective, the top blue lines are the Worldwide Healthcare Trust's cumulative performance, our NAV and share price. The gray line is our benchmark. We also put the FTSE in there just on the bottom just to show some perspective for the UK broad market. And I think this slide shows a few different things. First and foremost, the benchmark return over the UK index, to me, suggests that global healthcare exposure in your portfolio is an absolute must. Perhaps as we think about tech, I think over the long term, healthcare, given its huge demand and secular nature, needs to be in your portfolio in some form and fashion. But number two, I think what this slide shows is that an active manager, a specialist investor, like OrbiMed, like the Worldwide Healthcare Trust, can outpace the benchmark over the long term, given really how highly scientific, regulatory, and idiosyncratic this healthcare industry can be over the long haul. Next slide, please. And so how does this performance stack up against the entire world of all closed-end trusts? And that is what's listed here. This isn't just our healthcare competitors, but this is trusts that have been in existence for at least 30 years, just like the Worldwide Healthcare Trust has. And I will use the term, we're comfortably in the number 2 spot, despite some volatility in the healthcare space over the last few years. I think we're at a point of inflection, and we're eager to get back to the number 1 spot, a place that we held for a number of years before the recent post-COVID volatility. Next slide, please. So this is my final slide, and I wanted to review our playbook for you, as we like to call it. I did not touch on every point listed here in the slide in my presentation, so I'll comment on a couple of those here. But first and foremost, we're committed to our long-term recipe for success, which again is clear from my presentation. We're going to continue to invest in innovation. I spend the majority of my day and the majority of the team's day seeking that innovation. We allocate heavily to growth stocks, growth sectors, such as biotechnology, typically underweight pharma, all part of our long-term recipe for success that we're going to continue with going forward. Ultimately, this type of innovation does lead to new products and clinical catalysts, which we've seen over our 30 years. That's what drives value creation in this space. A couple of things I didn't talk much about in my presentation. First of all was mergers and acquisitions, particularly biotech M&A. Which has really inflected since the middle of 2022, paused a little bit around the last US presidential election, but has inflected again in earnest. This is a huge part of the trust, and we have some proprietary components of the trust to try and capitalize on biotech M&A. We think that continues in 2025 and beyond. One thing I didn't touch much on, and Aaron referred to it at the beginning, is the political headwinds. I think there's been a massive change in that just over the past month with President Trump and the deal that he struck with Pfizer, I think is a harbinger of things to come, in which drug pricing is going to subside as a headwind and as a concern going forward and actually become a tailwind. And then lastly, just a comment on valuation. Healthcare right now is a very attractive entry point. Valuations are just coming off of historic lows. There's a couple of exceptions to that, but healthcare, because of the dramatic underperformance over the past few years, is at a great entry point right now. So this basically underscores the entirety of our bullish outlook for the remainder of this year and certainly beyond. So with that, I'd like to thank you for everyone tuning in and pass it back to Aaron for some Q&A.
Fantastic. Well, thank you very much for that, Trevor. That was very insightful and great to hear your thoughts on the exciting themes and hear about the latest from Worldwide Healthcare Trust. So just as a reminder to our audience, if you would like to ask a question, you can do so by clicking the chat feature on the platform and typing your question in there. And just while we wait for some of those to come through, I wonder if I could kick things off actually. And that's, you kind of referred to it briefly at the end, but familiar that OrbiMed has this biotech M&A swap basket. I was wondering if you could provide some more details on that, because I understand that's now one of the trust's largest holdings. Is that correct?
Yes, that's a great question, Aaron. You're actually spot on. It is actually the largest position within the portfolio. And those who might not be familiar with it, the swap basket is actually a collection of securities, in this case, biotech, which is a proprietary collection of names that we've chosen collectively, individually, to try and harness and capitalize on this impressive M&A trend that we've seen. And we're seeing roughly about a deal per week in the biotech space, with terms that are ranging, maybe sub-billion to maybe 15 billion, but averaging about $1.5 billion. So what is this swap basket? So what we do with my biotech colleagues is we first imagined this middle of 2022. What we tried to do is select individual companies, biotech companies, that we think are takeout targets because management is a willing seller, because they have great innovation, because they're a hot therapeutic space, or they're in a situation where they're in a capital bind, and with the IPO market being difficult, their exit strategy is to get taken out. And we've had enormous success in putting together this basket that has not only contributed to our outperformance, but has outperformed the broader biotech indices because M&A is so hot. And look, we've been great at selecting companies that have gotten taken out, but we've also been good with this basket at selecting companies that go up when one of their competitors get taken out. So a situation where all boats float, even if it's just one company getting taken out. So we constantly monitor this basket of stocks. Right now it's about 60 names. We modify it and swap out its constituents about once a quarter on average. We'll do it more often if we have to, if we have a flurry of takeouts. But it's been a great success for us because it allows us to create a liquid vehicle to get exposure to this theme without taking single stock risk. And in the biotech space, for anyone who's familiar with it, it's a landmine of binary risk, both upside and to the downside. And so that reduces it dramatically and gives us a lot more exposure to this very important theme.
Fantastic. Thank you very much, Trevor. I can see that we've got some questions come through on the chat.
Sure.
So I'll hand those over to you, Trevor.
All right.
Thank you.
Yeah, great. Thanks, Aaron. Some interesting stuff in here. So one of the questions I see here is talking about artificial intelligence, and they're wondering if they could elaborate on how we use AI to support our day-to-day operations and portfolio management. That's a great question because this has massively inflected over the past year and a half for us. Like I mentioned, our quant team, which is basically what we refer to as our AI team, has moved to 4 individuals who've created a number of different platforms that we utilize in terms of monitoring share price performance, monitoring different therapeutic areas, monitoring the trading blotter, and it's all synthesized in a variety of different ways to help us, in conjunction with our chief risk officer, better create an overlay strategy to the portfolio, not only around stock selection, but now it's getting more into sort of allocation opportunities, but also performance monitoring, individual stock monitoring, helping us with stop loss and some of that technique. And it's been very important for us because our active share within the portfolio is quite high, as is our turnover. Even though our sort of number one mantra is buy and hold, we still have a fairly amount of turnover, if you will, within the portfolio. Another interesting question here that asks about our stablemate. I like that term. Yes, our sister trust, which is the Biotech Growth Trust, also managed by OrbiMed. And they're talking about the increase in Chinese biotech as innovation has evolved quite rapidly. And has WWH followed a similar trend with regards to exposure in this region? Great question. Simple answer is yes, we have. This has been a credit to that emerging markets team that we have in China, where we've have a team of analysts there. And they've helped us understand, actually for a number of years now, the acceleration of innovation in China. And we've included that exposure within the portfolio for probably, I want to say about 10 years, but really much more in earnest over the past 6 years. It was a big winning sector for us around COVID, given some of the domestic development of vaccines during the time. But it's been a very difficult space to invest in because of all the geopolitical risk, macro overhang that has been, a lid on share price performance. China economy was questionable there for about 18 months, but the innovation is not questionable whatsoever. In the portfolio exposure right now, we started the fiscal year at high single digits, but China biotech stocks have been ripping on average about 50% year to date. So our exposure has gone up from about 8% to about 15%. We're trying to actively manage that and probably reduce, but just for exposure reasons. Again, geopolitical risk never goes, quite frankly, to zero, so we have to be aware of that sort of going forward. But our involvement in emerging markets, it will continue now and into the future. Here's a quick question on the Evoke trials. That's a great question. This is really putting me on the spot. So for those who don't know, Evoke trials, this is someone who's been studying the GLP-1s, but the Evoke trials is the study of semaglutide, which is the active ingredient of Ozempic and Wegovy, and the treatment of mild to moderate Alzheimer's disease. Because of the hypothesis around metabolism being a exacerbation component to patients with Alzheimer's disease, and there's some proof of concept data. Look, I can be honest with you, I think these are maybe not even a coin flip. It's 50-50. I know the proof of concept data was very encouraging, but two large trials both have to be unequivocally positive with appropriate statistical significance and clinical significance. It's hard to adjudicate that one way or the other than a little bit of 50-50. We are not involved with Novo right now within the portfolio. We were previously, and it's not because we don't think Evoke can work. I think it's interesting because there's probably asymmetrical upside given where the share price is. But rather, our focus right now has been the lack of commercial execution at Novo and the difficulty they've had growing prescription trends, particularly for Wegovy in the face of what Lilly's done with Zepbound and Mounjaro. So that is where our cautious lies, not necessarily on Evoke, but I wish you best of luck. And if you're going to play that catalyst, it's a very interesting one. Another question here on M&A and some of the therapeutic categories that have been popular. Well, it's a little bit of some of the usual suspects. Every time we think oncology is fading in interest, it comes roaring back. There's just too much innovation in oncology, and it's such a great marketplace because of freedom of pricing. The bar keeps getting higher for the success of an oncology product, but with that higher bar becomes flexibility in pricing because the efficacy continues to be incredible. So oncology is hot. Metabolic disease, a little bit of a spillover from the obesity craze, maybe calming down a little bit, but I think that market size is just way too big for companies to ignore that. So I think that's a big deal. And I think CNS, neurology, in a variety of different areas, is also very hot because of the large unmet medical need, sort of lack of new product flow in that space more recently, and asking about premiums. That's a tough one in this environment because it's all kind of where you stop and start. You know, biotech valuations, whilst finally starting to rise after 10 years of being effectively flat, the premiums are not reaching 52-week highs. It's kind of keeping a lid on it. But as biotech continues to accelerate, those premiums will also accelerate. So we're very excited about M&A as a strategy, sort of going forward, if you will. Another question on, let's see, on weight loss. Which companies are currently looking at the most interesting in the field? Well, the short answer there is, quite frankly, it starts with and ends with Eli Lilly. What Lilly has been able to do, both in terms of innovation, advancing the science, doing combination products, which I think some people don't quite realize. I talked about combination products in my presentation. but tirzepatide is actually a combination of a GLP-1 and another agent, and their next generation drug is a triple combination as well. So that's creating a platform in which we're starting to see this unprecedented efficacy, and Novo so far hasn't been able to match that. The other sort of tailwind for Lilly as well is in the development of an oral medication with the GLP-1, in which Lilly has now finished the majority of those clinical trials and will be filing for an obesity indication for an oral small molecule pill at the end of this year. And that's going to be incredible for those who either don't want to take a needle or those who can't afford a needle. And our expectation is that the oral medication will be priced at a discount to the injectable medicines. And like I said, they'll be launching that next year. And Lilly has already produced $10 billion worth of commercial product ahead of that launch next year. And when you think about companies that are behind them, Novo was close, but they've had some pipeline disappointments. Everyone else is either phase 1, phase 2, maybe Amgen with phase 3, but we're a little bit suspect on the dosing regimen there. So the moat, I guess is what I'm saying, the moat between Lilly and everyone else is staggeringly huge. When we think about market size, which is the other part of this question, we have to think about the number of players. We've had to take down our broader numbers because there's been some players who have been falling out. But again, I think the upside to numbers is less about obesity and weight loss, and it's going to be more about all these other additional indications around cardiovascular and metabolism, maybe even Alzheimer's, that analysts will have to put their numbers up for again. So look, these stocks have been a little bit of whipsaw. We're comfortably at $100 billion at the end of this decade. I think into next decade, really the question is it 150 or 200 billion? There will be some LOEs that will have to be navigated, but I still think there's upside to numbers in that space. And then maybe one last question here. There appears to be much greater emphasis on medical equipment and supplies than your normal top 10 holdings. Yeah, that is a very good observation. That is also correct. I think that there's two different phenomena going on there. One is the impressive innovation in medical technology and the growth of that space, especially in the large cap space, like companies like Boston Scientific, which is very prominent within the portfolio. What's going on with Edwards Life Sciences in the cardiovascular space. I mentioned Intuitive Surgical and the robotics space as well. The innovation there has been great. Share prices have been moving. And importantly, there has been little to no, I shouldn't say, I'll say little, not no, but little political overhang in the space. For example, like pricing, which has been a huge overhang on biopharma for the past 10 years, but acutely over the past 5 months. And we've seen the benchmark suffer greatly because of that. But over the past 5 years, healthcare technology or medical technology has been great for us. And so that's why it's represented in the portfolio. And then the third thing I'll mention is large cap pharmaceuticals. To us, that is a very heterogeneous group of companies. What I mean by that is there's a lot of have and have nots. Companies with great growth prospects, good management, great pipelines, very astute business development. And then there's companies that are don't have good pipelines, have big patent expirations, maybe bad management teams, and less successful business development. And so that has been at its lowest point for us relative to the benchmark in terms of investment, because we just think there's more have-nots in the space than haves, and a little bit of this Trump overhang as well. So that's another reason why med tech has been so prominently a part of the Worldwide Healthcare Trust more recently. And quite frankly, it's really been fascinating to see that all the pockets of innovation are often represented as big contribution to returns over the past 10 years. It's from all of our subsectors, and that's why it will continue to be sort of a one-stop shop, if you will, for all things healthcare investment. But it looks like that's the end of the questions, so I'll hand it back to Aaron to wrap up.
Fantastic. Thank you very much, Trevor, for the time today. As you've said, that does conclude our Q&A session and the event. So thank you very much to the audience for joining us today and for your questions. If you'd like to access more information about the company, please don't hesitate to refer to the Edison website, where our research and content on the trust is freely accessible. And just so you're all aware, a recording of this webinar will be made available in the coming days. So all that's left to do is say thanks very much, Trevor. Thanks again, audience, and enjoy the rest of your day.
Thanks, everybody.